Hello traders, Mark P. Markets here. My name is Mark Principato and I'm a chartered market technician, and thank you for joining me for another exclusive Bitcoin video analysis. So in this session I want to talk about the scenarios that we're anticipating for Bitcoin over the next few days and what type of reward risk that looks like. All right, so with that said, let's get started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. Also, if you'd like to know more about greenbridgeinvesting.com, there's a link in the descriptive portion of this analysis. We offer swing trade signals and all those kind of things. All right, so let's talk about Bitcoin. As you can see, Bitcoin has not really made any significant progress since May. If you look back here, since it touched that low back in May around that 30K area, you can see it's been in this tight consolidation. Midpoints in such a formation are usually highly random. As you can see here, we're getting this red candle today. Now, I talked about in my analysis that we need to clear 36K decisively, meaning we go above it and we close there. Yesterday's candle, we tried, right? Yesterday's candle's high was what, 36.6 basically, and we're giving it right back today. Now, this doesn't mean that it's going to go straight to 30K, and this does not qualify as a sell signal just yet. This needs to close, this candle needs to close, and the low needs to be taken out. If a sell signal develops here, that's just a failed breakout off of a minor resistance to begin with. Like I wrote in the analysis, the midpoints of such consolidations are highly random and are usually a better place to reduce risk, not put on more risk. People get all sucked into the hype and all the other reactive nonsense that's out there, and they buy into this thinking, oh, it looks good now. But this is actually a really bad location. The better reward risk is the 30K area or closer to the 28.5. In fact, if you bought this thing now at the 35K area, basically, you have to risk anywhere between 6,000 and 8,000 points in hopes of making 5 points, and that's the maximum, right? That's based on the 40K resistance. The reward risk is not worthwhile for swing trades. So here are the two scenarios that we would like to see that would prompt a new swing trade long idea. The first is we pull back to the 30K or 28.5 area, something like that, and we reverse again. That may look like another bullish pin bar, something like these two here. That would be good reward risk, and hey, if it goes back to the middle of the range, at least it gives us an opportunity to lock in some decent profit for the risk that we had to take. The other scenario is price continues higher, breaks 41K, and then pulls back. Okay, the 41K break and pullback is at least a sign that the structure is changing. The range is likely being broken out, even if it pulls back slightly after the breakout. Something like that would offer better structure relative to a better price, and we're willing to forfeit better prices for such a situation. So those are the only two scenarios. Just to give you an idea, over the previous 3 weeks, we've only had 3 signals. Okay, I'm sorry, 4 weeks. We've had 3 signals. That's less than 1 signal per week because we have a very well-defined rules-based system. One of the great advantages to that is it helps to filter out a lot of the noise and a lot of the reactive nonsense that goes on in such a range. So if you are not day trading and you have more than 3 trades over 4 weeks, you're over trading. And there are not that many high quality opportunities. Patience is very important in this game. So again, at this point, I wouldn't react to this, just waiting for a pullback, seeing if we could get another higher low, or this thing reverses, breaks higher, and then gives us the higher low. If you have any questions and you'd like to know more, you know where to find me. I want to thank you very much for taking the time to watch this. I'll see you next time. Thanks for watching.